This is the 37th episode of the Effective Executive Podcast. And this week I wanted to cover stock trading lessons to apply to your organization. Now, I know this is kind of a theme I'm going through at the moment, but I never really thought about the correlations between how you invest or trade stocks and applying these lessons to an executive. And I thought, there's some complementary things here. So the last week it was don't confuse brains with a bull market. And a lot of this especially has kind of cropped up from talking to some, especially the younger executives. They've all gone out and bought some type of cryptocurrency, whether it's Bitcoin or Ethereum or Dogecoin or any of a number of other thousands of different types of cryptocurrencies that are coming out. And, it's kind of the hot thing to do. Uh, and you hear a lot of it. So, it's cool to have your laser eyes on your social media account, especially on Twitter. You'll see it quite a bit. And some of this also is rooted in this kind of, these are my words, maybe not the ones that these people would use, but belief in the people and not the Fed, that kind of get the money out of the hands of the Fed. But, ironically, what I find is a lot of these same executives have strong belief in the financial acumen of economic folks like Paul Krugman, and he's a Nobel Prize winner. So it's hard not to blame you for that, or any executive for that. And Stephanie Felton, Kelton, that is the what is it? The belief that you can basically print all the money you can. Modern monetary theory. I mean, it's just, oh my God, it's insane. And some of these things are being embraced, and at the same time, so is government, because government is propping up the economy, and everything's wonderful when people have money in their hands. But at some point, somebody's got to pay for this later. But today's episode is not talk about the economic impact of these things, although I think people should be listening to folks like Peter Schiff and Michael Burry. That the movie The Big Short, he's put warning signs out about what's going to be happening in the economy in the years ahead. He's bet against Tesla, which is a hot one, with, I know, a lot of young executives buying into Tesla, as well as the cryptocurrencies and things like DoorDash and Airbnb and a number of stocks like that. But, for me, executives work really hard for the money that they get. And I get a little frustrated, especially here recently. You can tell the speculation's going very high on some of these cryptocurrencies. And I've invested in them. I'll be the first to admit. But I hate to see them kind of piss away their money in speculative assets. And, I'm actually contemplating a whole YouTube channel on this, because this subject, especially nowadays, comes up quite a bit in conversations and sidebars I have with executives. But for this, becoming an effective executive is about doing the right things and not doing things right. So I want to kind of still focus on that, but I think there's 3 lessons that you can take away from, trading stocks, and that can help you in these situations as well as with your organization. So here are the 3 lessons. The first one is when you're dealing with speculative investments, you try, at least I do, I try and keep things on a very small scale until I kind of get to know the movements of the stock. And especially when I looked at things like crypto, that I think is very risky. I'm looking at it, but I'm also looking at a way to get out of that particular investment. So, for instance, I bought Bitcoin, a couple Bitcoin, $11,000, and I sold it at 35. Now, somebody's going to say, at at 35,000, I made more than 3 times my money. Well, it went up all the way to 65. Oh, you idiot. You sold it. Well, you never know what the top is. But the thing about speculative investment is I like to start on a small scale. And then, like I said, once I get to know that particular investment and how it moves and what moves it, then I kind of gain confidence. I never did really with the cryptocurrencies. I probably missed out on some things. Visa helped with that one time because I was going to put 2,000 into Dogecoin at 5 cents, which would have probably at one point been worth, $40,000 or something like that. But Visa wouldn't let the investment go through crypto.com. So anyway, I had a long conversation with those folks. But so the first lesson is really about starting on a small scale. So if you're in your organization, start on a small scale. If you're innovating, trying something new, do it on a very small scale. And most of the time, you're going to have an opportunity to do that. Now, some things are destructive in nature where, it's kind of, you got to go with it or not go with it. And I understand that. But most of the time, I'm going to say probably 90 to 95% of the time, you can do things on a small scale without blowing up the world. So that's lesson number one. Lesson number two is, put a stop loss into things that in your organization that you want to speculate on and innovate on. And I've talked before about errors of omission and commission, so I'm not going to go through all that. You can look at the old videos associated with that. But you should be doing things. You should be trying new things within your organization, but you got to put a stop loss on it, right? You don't want to just lose, in the case of investing or trading, you don't want to lose all of your investment, and you want to guard against huge failures. And obviously doing things on a small scale helps with that, but you also can kind of put a bottom. This is how much we're going to put into this before, we decide that we're going to scrap it. But it's got to be in your head that it may not work out. Might have seemed like a good idea. The market changes, or the market didn't react the way that you thought it would. So have a stop loss. So that's lesson number two. Whether you're trading or innovating in your company or trying something new in your organization. Then the third one that as I looked at this and how executives can apply is don't chase things. So, I see these, especially on Twitter, I see, Bitcoin is at an all-time high, $65,000 or whatever the number was for Bitcoin. And I go out there and people are still buying it, and I saw the same thing with GameStop. That was something else, it's going to always go up. Well, it doesn't always go up. You're going to hit a point, and at some point it's going to go back down, and people are chasing because of this common word, FOMO, fear of missing out. And so they get into it, because the frenzy is just too much, and the emotion and things of that sort, and people jump into it. And I just find this to be very frustrating, because all that anybody would have to do is look at a technical chart and see how something is doing, and that chasing it was probably not a good idea. And now, it's gone from 65,000. It was at 31,000. I think today it's somewhere around $37,000 or $38,000. So, I don't know where it goes from here. If you believe it's a long-term trade, great, then do it. It is a very speculative thing from my standpoint. And so what I get from there is don't chase your competitors, in your organization. Oh, they're doing great. They got this new product and everybody loves it. Well, determine how you came to that conclusion that it was such a great thing that your competitor's doing. And I also find it very hard for people to copy their competitor, because they don't have the same systems and people and customers and things of that sort. People make the assumption that a competitor has the exact same customers that you have. Well, why are they dealing with you, and why are certain people dealing with them? Because there's differences in those systems that serve them well. Now, it's nothing. You can try something out on a small scale that a customer's doing and see what you get, associated with it. But I find chasing or copying a competitor, the really clear message that I would send is you don't copy a competitor because it always leaves you behind unless you can improve upon it. And there's usually opportunities, especially in an innovation, to make some product or service that's better than what your competitor is doing. But you got to be smart about it and learn how to make it a better product than that's out there. So those are the three things. So do things on a small scale is the first lesson. The second lesson is, put a stop loss into an innovation or a new idea, that you don't just continue down a path that, is bad and you're just wasting money and time pursuing it, and kind of have an idea ahead of time, what that stop loss might be. So for instance, when I do swing trading, in an investment, I say, okay, if it goes down below 8%, I'm going to stop investing in this particular stock. I'm going to sell. I've got a stop loss in there that says that's enough. And then the third thing is don't chase it. Don't copy a competitor, the hot hand, it's at 65, it's going to $1 million. I've heard all this. And I think that the lesson that I've learned over the years is that, especially having gone through the bust and the .com bust, is, that washed out a lot of companies. And I think for me that this same pattern is going to happen with these cryptocurrencies. There's, a lot of hype behind it, like there were at the .com companies in 99 into 2000. And then the bust came and a lot of them got washed out completely. I mean, we're talking about zero. And if you think 1,000 zip cryptocurrencies are going to make it, I don't. Maybe I'm wrong, but I really don't think that's going to happen. And something new will come along. You even have right now with Ethereum and what's the other one? Cardano. I see, Bitcoin was the first generation. Second generation was Ethereum. And but Ethereum uses a lot of energy like Bitcoin does and wastes a lot of hydrocarbons and things of that sort. And then the third generation has come along, Cardano. It uses less energy supposedly. And so things are improving maybe in those cryptocurrencies, and what was originally Bitcoin, now Cardano may be the great thing. And there's going to be probably a fourth generation and a fifth generation. And that's one thing about technology, right? Is we keep improving it and making it better. So anyway, that was the message I wanted to communicate this week. I'll let you know if I do start a a trading or economic channel or something like that on YouTube. I'd probably only do it on YouTube and maybe make reference to it in The Effective Executive. But they kind of have things that are Venn diagrams of things that kind of overlap in a lot of areas. So that was it this week. How you can, your stock trading lessons to apply to your organization. Talk to you next week.